Hello guys, welcome back to the channel. It's your boy Hassan. So I'm back with another banger. I'm back with another video. So guys, I told you about support and resistance, told you about alchemist, but I told you that I'm going to be focusing support and resistance because that is my own strategy that I use to enter and exit the market. It gives you where to enter from and where to exit from and why. Support and resistance. So I combine it with other conferences, like for example, if I want to buy, I combine it with demand areas. That is supply and demand SMC people. There are a lot of other strategies: ICT, supply and demand, top-down analysis, SMC, what else? Trend lines, alchemist, whatever, solar watt. There are very many, but I found support and resistance being the core key to most of those trading strategies. If they don't have support and resistance in them, it is hard for them to get clear sales, so clear entries or trade. So now, me, what I do, I combine market structure, price action with support and resistance. I only use supply and demand for entries on the lower time frames. I can also use it to spot possible or to build my case. For example, I wanted to show you this trade here that it's going to happen, I think, next week or a week after next week on Euro GBP. What do you see on Euro GBP? You have price action that went up, so now it is coming down. Why is it coming? It is coming at a place of support. Just learn how to mark your support and resistance well, and it's going to be easy for you. It is coming at a place of support. So if it's coming here, we are going to be looking to buy. Now that is one. That is one. That is a narrative that we already built. We are looking to buy Euro GBP. Why do we looking to buy Euro GBP? Because it's coming at support. Do we buy now? No. We are waiting for price action to come and comfortably sit on this support. If it doesn't sit here, we don't enter. Can it go up minus sitting here? Yes, it can, because it is already in a demand zone. People who are the SMC people, you'd mark this one as a demand zone. It is already in the demand zone. But remember, keep in mind that this is the weekly time frame. Price is not just going to tap here with the week and then it shoots up. It can, but under rare circumstances, and those are the circumstances I wouldn't want to enter my trade in. So now price has to come and sit here. So that is one. Two, now after I've known that I'm going to be buying Euro GBP at this place of support, I've already built my narrative. I'm looking for buys. So now what triggers me to enter a buy? I need confluences. In order for me to gain much confidence in my trade, I need confluences. Remember, this is a money market. We're going to risk money, actual money, real money on the line. So just don't enter a trade because it is at support. No, you have to build more case to give you confidence to enter this trade. So it is at a place of support. That is one. So now if it is at a place of support, what next? We look for confluences to support our ideas, and we don't just look for them, they have to be there. So two, we have a demand zone on the weekly time frame here. What is a demand zone? This is a place whereby price created created a rally, a base, a rally. So now after that base rally, there was an indecision candle, then an engulfing candle, and then a big move out of the price, creating this imbalance here. So a valid demand zone, you'll have an indecision candle, you'll have a big impulse away from the indecision candle, and it also has to break structure and then finally create an imbalance. So do we have an imbalance? Yes, imbalance was created here. Do you have an indecision candle? It is there. Do you have an engulfing candle with a big move away? Both are there. This is an engulfing candle, engulfing these two candles, and then a big move to the upside. Does it break structure? Yes, it broke structure. The third one is it has to be with the trend. What is the trend? Since we broke the structure, the trend has to be bullish. We did not only break this one, we broke this one, we broke this one, and we broke also this one. So we broke three structures to the upside. So the trend has to be bullish. Are we looking to buy? Yes, we are looking to buy. Good. Now we have SMCO, demand and supply, has told us that we are buying. Then we are at a place of support. We're also looking to buy. So now what happens? We go to the third confluence that I always want. It is the QM pattern. You have a low, a high, a lower low, and then we create a higher high, showing us that we have switched. We are now in an uptrend. This is a low, high, lower low, higher high, breaking this high. So we have switched. This is a QM pattern. I always tell you about. I think about this thing every day. So now we have switched the price from lower lows, lower low, lower high, lower low, lower high, lower low, lower high, lower low, to higher highs. So we are looking to buy. We are looking to go up. Do we enter immediately? No, but at least now we have three solid confirmation that we are going up. So after that, we drop to the lower time frames, like for example the daily. What do you say in the daily? Same thing, same thing on the daily. We have a high, a low, a high, a lower low, and then we have a higher high. So then we have a higher high which was tested here and create another higher high. Then we have a demand zone here. This is the demand zone. The other one was rally, base rally. Now this demand zone is drop, base, rally. And now price has come into this demand zone and is rejecting. Do we enter? No, we won't enter unless price comes and sits in this area comfortably. That is now when we look for entries. We might even drop lower to the lower time frames to look for bullish price action, especially on the 4-hour price changing character, and then we enter. However, entry here would be good for only buys. So your typical entry would be you enter here, because when price come and sit here comfortably, not this test on the wicks, and then your stop loss is going to be around 115 pips. And guys, remember, some people are going to say, oh, now the stop loss is so big. Yes, it is big, and it has to be big because you get your trades from the weekly, and you know they are going to be running for long. Remember, we are swing traders. They are going to be running for long. If you got them on the daily and execute on the 4-hour, they're going to be running for days. So which is 100 here would be around 70 or 60. If you got them on the 4-hour, what is 100 here is going to be around 30 or 40. If you got them on the 1 hour like that, up to when you get to 5-10 pips, I wouldn't want to use a stop loss of 5 pips. Then your target is going to be at least 1 is to 3. You're targeting 300 pips, targeting this previous high 300 pips, but I know price is going to go up to around 400 pips. It's going to go up to around there, 400 pips. So your target is going to be 1 is equal to 4. That is how we swing trade. That is how we use support and resistance to build our narrative. You see, with these other strategies, it is hard to get a clear narrative. Price can come here and you don't know what it wants to do. Does it want to go down? Does it, like, you don't know what it wants to do. So you're just waiting for a change of character, break of what. Sometimes the things are going to happen when you're not around. But for me, the moment we get to support, I know we are looking to buy. So I just build my narrative with different confluences to give me the confidence to enter for a buy in this trade without any hesitation. Do I have any chance of losing? Yes, I have a chance of losing because nothing is 100% with price action. But at least I'm sure that what I'm doing is following my rules, and I know in the long run I'm going to be profitable. Why do I say in the long run I'm going to be profitable? Look, I'm going to show you the previous price action. Good. So now this is the previous price action that has been happening on Euro GBP. Why do I say in the long run I'm going to be profitable? This is one. Price came to this area First of all, there was a break and retest around this area. Okay, not a break and retest, but there's a retest. This area, price broke, went up, came back to this area, went up, came back to this area again, went even higher, breaking this structure here. Okay, so now we came, retraced, whatever we did in the middle. Even when price came here, we're not interested. This is what the SMC people call liquidity. Price came to sweep liquidity. And where did it come to sweep liquidity? This support area that we marked here. So if you bought here, because it created support here and you marked this support, you bought here, you got profit. Bought here, got profits. That is 2 times. You came here, you bought again, got some few profits before it reversed. If you move the stop losses here, it would be in around 100 pips. It reversed. When it come back here, you bought, because for you have your in your mind that when I'm at support, I'm buying, and this is a weekly time frame. So when you bought here and look at the move away, 1, 2, 3, 4 weeks, 4 weeks of bullish price action. You bought. So now 1, 2, 3, 4. You have 4 times out of 4. This is the 5th time. When price came here, you bought, but unfortunately it would hit your stop loss unless you put 100 pips like me, bad man. So price came here, you put your 100 pips. Suppose even 100. I would survive because even this one is 115. Yes, 110. Anyway, let's say you were hitting. You have won 4 times. The price hit your stop loss, but still you entered because you know it just came for a stop hunt. But after hunting that stops, it's going to enter. You put your 100 pips stop loss, and then you got some profit to the upside. Price that is 5. You have lost 1. You have won 4. Then here we would not enter because price did not sit here, and now we came here. Now remember, this is the last point we reached, so the stop losses have to be below here. So that means it tested this area, or you adjusted your support a little bit to accommodate this, because now this is the new price action. It came to this area, you entered, put your stop losses below here, you got some profits. Moved your stop loss, probably stopped out for around 40 pips. It came back here, you entered for a buy, got pips up to here. Guys, I don't know how you want me to teach you this, but for whatever reason, support and resistance work. This means you have entered 7 trades. Out of the 7, you have lost 2, but 1, 5. Out of the 5 you've been winning, your risk to reward has been, you risk 100 to make 400 pips, minimum 300 pips. So now you'll multiply 5 times 300, that is 1400, and then you've lost 200. So in total, you have a profit of 1300. That is how you become profitable. You don't become profitable by winning each and every trade. You win more than you lose, and even the ones that you're winning, you win with a high risk to reward. So now what is happening is we are having a real life situation unfolding onto our hands. That is just this support to this area here. Why? Because that is where the new price action is here. So you'll enter, or I'll enter from here. Good, and put my stop losses 100 pips below. Good, so my stop losses will be there. My stops are going to be there because that is where the new price action is. So my stop losses have to be below the new price action, with a view that as if price goes beyond that, then the trend has changed. Good, I think that one will be enough. 100 pips below. 100, this is 1, 5, 1, 2. Okay, that's 100 pips below. So I'm waiting for price to come. I can now here I can even put buy orders here. Buy orders here. So I'm waiting for price to come, tap my area, and then take me to the moon. And I know it will take me to the moon. targeting 400 pips to the upside. Yes, I think this is okay, because price now has moved away from this resistance. We had to adjust. However, we don't put stop orders. We don't do that, because anything can happen with price action. You wait for price to reach there and see what is going to do. So now, before I end this video, I'm going to teach about resistance. This was support. So resistance, how do we get the resistance? Where price action has tested the most times. Now we have something here. Let me adjust this a little bit there to accommodate this here. So we have something here. Good. We have something here. Price came, broke out here, came down, retested on this area, and then dropped down. We didn't have a trade there, but still, when it came up, broke this area here, retested and went up. One, came back, retested again and went up. Two. So if you wanted to trade this as your support, you would have. Why? Because price came, let me adjust it very well here. Price came, broke out, retested and went up, breaking this structure. So this becomes your support. So when price comes back here and sits very well like it has does with this green candle, you bring your position size calculator, put it there, and then give 100 pips below. Why is it running? Put 100 pips below 100 there. Even many for this one. The last low is 25. I would put around 50 pips, because I don't expect it to go beyond that, and target the next high, which is this one, around 216 pips. However, price did not get there, so it got to 178, which is also good. So now what happened is it made a QM formation, breaking this low here to make another lower low. So what happens is, if you had moved your stop losses after it reached here, definitely move your stop losses above at least 100 pips. Yes, so if it retraces, you don't lose everything. So now, go to 100 pips. Price came here. It did not sit. When it used this candle, it went below. So you did not buy. It broke below the support. After breaking below, you cannot buy. So price dropped here, breaking even this previous resistance up to here. It came to retest this area. And when retesting this area, look what happened. High, high, higher, low, high, high, higher, low, high, high, lower, high. This is the QM formation. Price came to retest where it had broken the lower high and then fell down. So if you did not sell here, for some reason you were fearing, you waited for this big bearish movement that broke down here on the retest, and then you entered and then sold up to down here. Let's say you did not sell there. You said, oh, now for me, I don't know the things you're saying. You did not sell there. It is okay. You wait. When price came back here, price came back to this area. This would be a demand zone, but now look at the wick. It is connecting with this, and I told you, with pairs that are not majors, the wicks are very many. So when price came here, it gave you a huge rejection, and then it started dropping the previous resistance. It didn't even give you an entry. Tapped the resistance and then started dropping. It has dropped how many pips? So far it has dropped 300 pips. Dropped 300 pips. And if you put your stop loss of 100 pips, you would be in a 1:3. Yes, a 1:3. So guys, the strategies are there. Just make sure you do the right thing. Mark out your demand and supply area as well. Not demand and supply, guys. Yes, I'm seeing a demand area here. Mark out your support and resistance zones well, and wait for price action to come there and bless you. Trust me, you're always going to have better trades. Okay, guys, I forgot to tell you to subscribe to the channel in the beginning. Kindly subscribe to the channel, guys. Subscribe to the channel before you leave. Also, after subscribe to the channel, like the video if you've learned something. If you have not learned, you can always come back and watch the video to watch. Can rewatch it slowly to gain something from it. Subscribe to the channel, like the video, and always come back to watch more videos like this. Okay, guys. So I think that is all. Before I go, this one is coming to make a head and shoulder. This is also another conference. This is the shoulder, this is the head, this is another shoulder, but I think it is going to come up to here. Make another shoulder before we go up. Okay, guys. That is all for today. Bye.